Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Boothra. It's a Wednesday afternoon, 1:30 p.m. and these are the top stories that we're currently tracking. The midcaps fare better than larger peers amid a choppy session after early losses sparked by hawkish Fed chair commentary. The Nifty below 17,700. Defensives drag. Auto energy show strength.
Kirloskar Oil Engines hits an over 5-year high as 13% equity changes hands in a block deal. Shares gain 15% intraday.
Hopes of higher exports spur a rally in sugar stocks. Dwarike Sugar, Dhampur, Triveni gain 3 to 6% each. Reports suggest the government may allow an additional 1 million ton of exports if the output meets expectations.
Adani Group prepays 7,374 crore debt and releases pledge and promoter shares in 4 companies. The worst for the market with respect to Adani entities is behind us, say some analysts.
Krishna Diagnostic fires up as it starts operation at 100 collection centers as a part of a crucial BMC contract.
Okay, those are some mid-cap companies which are on our radar, on Midcap Radar today. As far as the markets are concerned, again, it's the mid-cap index which is shining. So we have the Nifty lower by 27 points, but it is not as bad as what the global indices suggested. So that one is down just 30 points as we speak. The Bank Nifty in line with the benchmark indices. But as I said, it's the mid-cap side of things which are looking very good. At the day's high is what the mid-cap index is at right now. Advance decline ratio in favor of the advances. So Reema, you know, we were discussing this earlier. We'll have to see whether this sustains at least the performance that we've seen in our Indian markets, or there'll be a follow-on rally to that. So that question is still something that we are looking for, but so far at least we've not seen a bigger fall from those levels.
Yeah, it's quite a stable session, right, compared to what we are seeing across the rest of the Asian markets. And after 2 days of gains, 400-point rally over Friday and Monday, if today markets consolidate, it's not such a bad outcome. The mid-cap index, as Sonal pointed out, has recovered 270 points from the day's lowest. So it's a perfect time to get to the mid-cap movers. Vivek is here to take us through the mid-caps moving around in trade. Vivek.
Well, good afternoon. You know, it's another session where, you know, the trend of last week has continued, where the broader end of the markets are outperforming the benchmark indices. So first on our list today is Kirloskar Oil Engines. You had almost 13% equity change hands. Most likely, you know, it's one of the erstwhile promoters it's been a cleanup trade as far as one of the erstwhile promoters is concerned. Some of the other stocks that are doing very well in this session today, Dishman Carbogen, you know, this particular stock up on strong volumes today. PNB Housing Finance and TCNS Clothing today, after a while, has perked up quite significantly. The other part of the market that's doing quite well, you alluded to Krishna Diagnostics, but 2 other names, you know, you're talking about Vijaya Diagnostics as well as Thyrocare, all 3 names doing very well in today's trading session. In terms of stocks that are doing very well with, you know, strong volumes, you know, it's the sugar pack. You alluded to them earlier, but it's the entire range of stocks today, and they are up on very strong volumes, and price action too is very strong. So names like Dhampur Sugar, Awadh Sugar, Dalmia Bharat, as well as Ugar Sugar, all of them are up quite significantly in today's trading session. Lastly, some of the stocks you know, that are quite weak in the session. First, we have Macrotech Developers. You know, it was a very volatile week for the stock last week, and today it continues. PB Fintech seeing a bit of profit booking. Phoenix Mills as well as Industrials are some of the stocks that are doing quite weak in today's trading session.
Okay, all right, Vivek, that's a long list, but yes, mid-cap index is the one which is outperforming in trade today. With that, let's move on and talk to the first corporate on our show today, specialty chemicals maker Neogen Chemicals. It is in focus, and the stock is gaining for a second straight session after the company actually went ahead and announced the acquisition of Bulai Chemicals for 25 crore rupees. What does it mean? How will it help the company? And a lot more. We have Mr. Harin Kanani, who is the managing director of the company, joining us now. Mr. Kanani, good afternoon. Thank you so much for joining us here on CNBC-TV18. Well, Bulai Chemicals owns the technology to manufacture N-butyl lithium and other organo lithium products. Can you tell us how does it fit in your overall strategy? What is the reason for the acquisition of Bulai Chemicals?
Thanks for the invitation. Yes, you know, Neogen has been known as a bromination and inorganic lithium salts company for a long time. Last 6 to 7 years, we've been, you know, expanding our chemistries and doing other chemistries such as Grignard reactions. And this is in the same line, like, you know, expanding the chemistry which Neogen can do. So organolithium is a relatively challenging molecules to handle. We have already started using them over last 1 year, and we were projecting our own internal consumption of N-butyl lithium and other organolithiums was likely to increase. when we were doing the complex advanced intermediate and CSM business. So we thought this was a very good fit for us because we will be one of the only company which can make Organo Lithium once we complete this acquisition, as well as use Organo Lithium to make the complex pharma and CSM business. Also, when we do this, lithium comes out as a waste, and we have a ability to recycle this lithium to inorganic lithium salts, which is a second lithium division. So this would allow us to actually use this technology to offer like organo lithium compounds to our existing pharma customers, as well as use this organo lithium and in our internal to make more competitive pharma and CSM projects. And it will also support our inorganic lithium. So there was a very good synergistic fit for us in all the divisions that we were having. So that's why we decided to do the acquisition.
How much of the organo lithium that you produce will be used for internal consumption, and how much of it will you sell to your clients? And just want to, yeah, go ahead.
In the beginning, it will be about 10 to 15%, what is our current usage. But as we get more projects, then the percentage can change over a period of time. And of course, in future, if needed, we can also further expand the capabilities.
Okay, so right now, are you, sourcing your lithium completely from outside? Does it help in backward integration as well to a larger extent? And if it does, what kind of cost savings are you looking at?
The current organo lithium that, as you rightly said, we were users of organo lithium and we were buying organo lithium from outside. Now we will be actually, making it in-house. In terms of a cost saving, it will not have an immediate impact, more so as we look at new projects and we also combine it with our recycling abilities. So in future, as this will allow us to attract as a strategically backward integration, more innovator customers in pharma and agro space, because we can first offer security of supply. And along with this ability to recycle, we can give significant savings. But this significant savings will, in a project will depend on a project to project. But the security of the supply part, the stability of supply and the savings together, we believe will allow us to gain many complex pharma and CSM projects in future.
So all this will be very margin accretive for you, right? The fact that you will be able to get more complex projects, there is going to be a benefit in backward integration. Do you have any numbers on the kind of where your margins will be headed in the future? Say 2 years, 3 years down the line. Go ahead.
Yeah, so far we've just done the acquisition. We still to do complete closing, and we are still evaluating projects. So it's a bit premature for us to share, what kind of a margin improvement we will be having. But over a period of time, once the acquisition is completed and once we've acquired it fully, we will be able to give guidance on that.
Okay. So, Mr. Kanani, two-part question here. Once, when you say that you'll be able to give it to your clients, they will have some security as far as supplies are concerned. Are you already in talks with your existing clients, or are you approaching newer clients for organo lithium? And the second thing is, are you looking for more such acquisitions to ensure that you are more backward integrated, you have this supply chain for lithium in place for your own production?
So, to answer first question, we already, as I said, have molecules which were commercial where we were using this. We were also in talks with customer where we expect this organo lithium will be used. So they were part of our developmental pipeline. So therefore, yes, there are existing molecules which we have clarity on, which will require these material. In reference to your second question, that are we looking for more such acquisition? So as a rule, Neogen is usually only planning greenfield and brownfield expansion. So we want to do on our own. But as and when, we get an opportunity where we get a key technology or key market access, that is when we look at that. So we don't selectively look at acquisition opportunities, and there are no selective plans for that.
Okay, so in terms of brownfield and greenfield expansions that you've spoken about, we did speak to you recently, but can you give us a sense of when these expansions do come on stream, what is the peak level of revenues that you're looking at, say, next 2 to 3 years?
So we have a 150 crore expansion, which is ongoing in our existing business, which will increase our organic as well as inorganic capacities. And we have given a projection that we can reach, let's say, up to 950 to 1150 crores with that expansion. And the Bulichem acquisition will be in addition to that. Similarly, we have also announced a 450 crore capex, plant capex over the next 2 to 3 years in our lithium salts for battery materials space and electrolyte salt space. And this is again allowing us to reach a revenue potential of around 1,000 to 1,200 crore by FY26, FY27, which we announced at the end of our last quarter.
Okay, thank you very much for joining in. That's the word coming in from Neogen Chemicals, up 2.5%. Get into a break. On the other side, we'll talk market technicals. We'll invite Samit Chawad of Angel One on the show.
Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Nifty is down 30 points, and the midcaps, they are the ones which are outperforming today. So it's a good time to get a technical check on the market. Samit Chawad of Angel One is joining us now. Samit, good afternoon. Thank you so much for joining us. What do you make of the markets? Do you think there will be some stability at these levels, or we'll see some movement from here?
Good afternoon, Sonal. See, Friday's, up move, a strong up move from the levels of 17,400 has created, some sort of bear trap scenario. It seems that around 17,300, 400 market has, found a good short-term support. So it would be seen as a sacrosanct support zone. Yes, it would be a daunting task to surpass 17,800, 850, but it's a matter of time. We would expect, 17,800, 850 to surpass quite soon. So, market is taking some breather before taking next leap of the rally. So as of now, the range would be around 17,800, 850 on the higher side, 17,500, 450 on the low side. So that is the range that we are seeing for Nifty. And since, it was a financial-led correction, we expect this, breakout to happen with the support of banking counters. And if there's any, support from the global peers as well, we are good to head higher. So soon we would expect Nifty surpassing 17,800, 850 and heading towards 18,000. The overall bias remains positive, and in last 3-4 days, the broader end of the spectrum is doing well. So mid-cap stocks have been bucking the trend. So it's better to, stick to individual stocks, till the time Nifty remains within this consolidation.
So the range stays 17,450, 17,500 to about 17,800 to 850. Individual stocks, Samit?
See, HL has been doing well since last, couple of weeks. Today, the kind of price and volume activity that we are witnessing, stock has already confirmed its breakout. It has entered an uncharted territory now. So looking at the overall price and volume activity, we expect this move to extend. 29.50, 20 and 80, these are the next levels to watch out for. As a trader, one can now keep a stop loss somewhere around 27.90. Apart from this, entire capital goods space has been buzzing since last month or so. So Cummins is the one stock, that has been moving steadily. A series of higher highs, higher lows can be seen in all time frame charts. And today, this stock has also, resumed its upward trajectory. So we expect Cummins to head higher. Next levels to watch out for would be somewhere around 1730, 1750. It can be bought with a stop somewhere around 1635.
Okay, all right. Thank you so much for joining us. So that's a technical check on the markets. For now, we'll slip into a short break. And on the other side, in our special segment, Midcap Spotlight, we'll be focusing on Natco Pharma. Stay tuned.
Welcome back. Let's get to our Midcap Spotlight segment. Ekta is joining in, and she's going to be telling us all about the buyback that Natco Pharma board approved today. Ekta.
Thanks for that. Well, yes, Natco Pharma is in focus. That is because the board has approved a buyback worth around 210 odd crores. This is going to be up to 30 lakh shares at a price not exceeding 700 rupees. It is an open market buyback. The buyback would be a maximum of around 1.64% of equity of the company. Now, the promoter holding pre-buyback is expected to be around 48.82% and post-buyback at a maximum of 49.63%. Public holding pre-buyback 51.18% and post-buyback at a maximum of 50.37%. Now, the stock itself, remember, has corrected around 38% from its 52-week high.
Okay, that is about Natco Pharma. The stock is in focus, but that's not it, Ekta. You're tracking one more stock for us today, Krishna Diagnostics. It's up almost 10%. What's happening here?
Well, yes, Krishna Diagnostics is in focus because the news is that the company is operationalized 100 pathology centers as a part of a BMC contract, which it won in Jan of 2023. The company, remember, had won a tender under which it was to provide lab investigation facilities for BMC dispensaries across hospitals as well as BMC dispensaries and hospitals in the city of Mumbai. And this was on a public-private partnership basis. As per the contract, the company is going to be setting up approximately 600 collection centers across the city of Mumbai, which will carry out 139 routine as well as special pathology tests. So this is a part of that particular contract that they had won earlier in this year. Executed a small part of it, a longer way to go, but nonetheless, definitely positive news for them.
Okay, thank you very much for that. Let's talk about sugar then. Across the board, sugar stocks are rallying. There are media reports that suggest that an additional 1 million ton sugar export could be allowed if the output meets expectations. Surbhi is here with the details. Surbhi.
Hi, thanks for that. So sugar companies are in focus today. All the stocks have rallied anywhere between 3 to 5% in today's trade, and that is because Business Standard reports suggest that there is a possibility of an additional 1 million ton of sugar exports. Now, this will be possible only if the domestic output meets the government expectations of 33.6 million tons of sugar production. As of this month, the sugar production has reached 24.7 million tons. The mills have already dispatched 4.3 million tons of sugar exports, of which out of the 6 million tons that were allotted to them. Now, the crushing operations will end by the end of this month, and the government will take a call on additional sugar exports by next month. However, our sources have suggested that this additional sugar exports is highly unlikely.
Okay, all right. The stocks are up anywhere between 5 to 10% today. Surbhi, thank you so much for joining us with all those details. And with that, we'll take your leave on this edition of Midcap Radar. Stay tuned. Your stocks when we return.